So for me, I have a good chunk of Bitcoin that I'm basically never going to sell, right? That's gonna just sit in there. It's obviously going to have its run-ups, it's gonna have its crashes, but at the end of the day, over a 20, 30-year period, it's always gonna keep going on. I don't know if you want to talk a bit about what happened with Trump coin, but that's
We can. We
a great
can. You want to talk
example.
about Trump coin?
Yeah,
I'm
'cause that
down.
was that was like
That was
the
amazing.
well, that was one of the easiest plays you could have in all of crypto, I think, because it was so obvious, right?
Like if you're up 100%, sell 50% of the position, you've taken your capital out, the capital remained there, it's free money. You're able to, if it goes 100x, fantastic, and if it goes to zero, fantastic. You're pretty much risking money for free when you make
Exactly.
this, right? Like I do that with options a lot. I like it. You know, it's beautiful.
Hello, and welcome back to another episode of Scotch Stocks. In today's episode, we're going to be talking about the crypto market sentiment. Are we bullish or bearish? What are we looking for in the near future, and how we plan to trade the crypto markets going forward to hopefully try to make you some money. So pay attention and watch the whole episode. Don't forget to hit that like and subscribe. Here's my friend Adrian Larreal, the big crypto investor that knows the market and has been making money with cryptos since since the start of crypto, you know what I mean? Since the start of Bitcoin, who the fuck knows at this point? But
13.
welcome since
Thank you, thank you, thank you.
2013. Welcome. So we want to hear from you. We want to get an idea of what's happening in this crypto market. We want to understand, are we meant to be bullish? Are we meant to be bearish? Are we meant to trade this? Are we meant to just buy and hold? What is happening right now? What do you see in the crypto markets?
All right. Sure, let's get it started. Let's see. Can I share my screen? I'll look at some
For sure.
charts first. All right. Let's go ahead
It's all
and
about
share.
them charts.
Yeah. I mean, a lot of people kind of take into account all these news and whatnot. For me, it's mostly the charts, the price action, and then from there, I kind of look at some news that could be catalysts. But at the end of the day, price don't lie. Yeah, let's just start talking about when you talk crypto, right? Bitcoin is the big daddy.
And the granddaddy of them all.
It drives the market, right? So let's take a step back and see where we are, right? And where we've been since basically, let's say the past 3-4 months, right? So going back to last year, most of 2024, we had that rally in early in March, right? That where we hit that new all-time high, 73,000. And after that, we see that we had this descending wedge essentially. But for the most part, we were in this channel, right? Trading between 53,000 and 70,000 essentially, right? Up until November, right? We had a run up here in that anticipation of the election. And everybody obviously was looking at Trump being the pro-crypto candidate. And when that happened, we saw that pump, right? So we went from early November to mid-December, up 50, 59, 60%. All right, it's a pretty big move for crypto, especially now that it's such a big asset class. So with that,
So we're talking about what, $1 trillion worth of market cap.
I think it's a close to 2 trillion.
Yeah, it's close to 2, right? So we're talking even a little bit more, probably like 1, 2,
Exactly.
which is a massive move, It's rivaling the likes of Nvidia at that point,
Yeah. I think it's number 6 in top 10 assets by market cap.
in the world. Yes.
Right. So we have that little background, right, on where we came from, right? Right now we're trading at 96,000. Ever since the new year, right? Actually going back to November, once we broke above 90K, we still have been trading in this range, right? Between 110 to 90,000, basically a $20,000 range. Obviously, once things start pumping, that's when I started getting text messages and calls from people. Hey, is this a good time to invest in crypto? What should I buy? How do I buy? So that's Now it's getting a little bit more attention in mainstream media. People that are not normally looking at the crypto markets are reaching out and asking, should I buy that? That's kind of, I don't want to say a top indication, but that's an indication that the market is kind of overheated. And we see that here, right? Look at the RSI in the overbought region. But what has been positive for Bitcoin in general is this consolidation period, right? You don't go straight up, right? Once you have a 60% increase in price over 2 months, you need to slow down, let the market breathe a little bit, consolidate. And that's what we've been doing here for the past, essentially since January, right? And again, that $20,000 time frame. Now, I want to introduce also the concept of cycles, right? If you follow on Twitter or X, Bob Lucas, he's kind of the strong proponent of this 60-day cycle theory within Bitcoin. But essentially, the whole concept is that Bitcoin trades in 60-day cycle, right? Essentially 2 months. And you can have either a left translated cycle or a right translated cycle. A right translated cycle is usually bullish, meaning that you see most of the upward movement in price towards the second half of that 60-day cycle. A left translated cycle is essentially a failed cycle where you see a pump early in the cycle, but then for the other half of the cycle, it really doesn't do that much. It doesn't break new all-time highs. So timing these cycles, we essentially ended our cycle or last cycle here in January, right? We had the pump all the way to 108,000, which if you subscribe to our Telegram group, I actually called it at 107, but 108 is not too far off. So we took some profits here. And that was the peak of the cycle, right? And then we saw the cycle bottom here, end of December, right? And then that was the start of the new 60-day cycle. So this arrow represents that. So right now we are on day 40 of that 60-day cycle, right? And again, we've been trading nothing bearish, nothing crazy here, pretty standard consolidation period on the 60-day cycle. I also want to point out some of these trend lines that we've followed. I drew these long before we had this price action. And for the most part, they've been holding up relatively well, right? We had some wicks under them and so on. But again, the point here is we're in this channel. So what does that mean? That means that we probably need to wait another 2-3 weeks for the cycle to play its course, get a new bottom. We're probably going to get another drop into this area right here, maybe to the lower 90s, potential even lower. We might get a wick even to the 80s. I've been saying mid 80s for a while too in our group. 85,000 was my initial target for this bottom. It didn't get there. All right, but we don't always get them all right all the time. But yeah, that's definitely a possibility where Bitcoin will drop to $85,000, even 80,000, right? A wick under 70 into the 70s, I wouldn't be too concerned. If we drop below that, like if we hit 60,000, I'll be very concerned, and it's probably that means that was the peak, right? 109 here was the peak. I think that's likely. That is very unlikely, but it is a possibility nonetheless. I think the most probable scenario is we go back down, retest this area here around 90,000, and then at the end of the month, we continue our pump. But that's just a little bit on Bitcoin right now and where it's going. Bitcoin dictates the trajectory of the market. So it's important to understand where Bitcoin is going, where it's been, and what it's doing to understand the larger market. But okay. I'll pause there. See, do you have any comments on that?
Well, so now, so now my question, because I like to look at, obviously, like Bitcoin is a little bit more tricky because you're not able to see, like, have an earnings call where all of a sudden you understand what sort of revenues and what sort of value really the company has created throughout the last 3 months, right? So it becomes very difficult for me as like a stock trader to kind of go into crypto and say, okay, this is the way that I look at it, at the asset. But I do pay attention a lot to news, right? And as I understand, like both this cycle and the news seem to, because I think you agree that it's like they both go hand in hand, right? I think you believe that it's more price action. I'm in the side where I believe the news is a little bit more important depending on how we see it. But in this case, right, like the reason Bitcoin has had the rally is because of Trump, right? It's the idea that Trump is pro-crypto. He got backed by the crypto degens, right? Got into office because, a lot of money was donated, and there's sort of expectations. And some of those expectations are the Bitcoin treasury, potentially the United States opening up the doors at the floodgates to start investing themselves. But not only that, creating the perception to the rest of the world that, hey, crypto is something that you can actually rely on and sort of like pay attention to, So those are the news that I'm paying attention to. And it's obviously like I'm still waiting for Trump to kind of even mention crypto. He still hasn't fully acknowledged the idea of it. Like he talked about the fund.
Investment fund. Yeah.
Yeah, the investment
the
fund.
Sovereign
The US
investment. Yeah.
Correct. The sovereign investment fund. That's what I meant. And it's interesting, right? Because he could make Bitcoin part of that fund, right? And like at the start of the year, we had at the start of last year, we got the Bitcoin ETFs, and that started creating a lot of hype because all of a sudden, all of the money that was sitting in tax benefit accounts, all of a sudden managed to move into actually a crypto asset that was able to boom and copy the Bitcoin. So I've seen all of this like sort of like slow moving pieces coming into the market, creating this like hype and demand, not only from retail investors, but from hedge fund managers, from the big banks, BlackRock, even, like all of the big players, right? So all of a sudden we're getting a lot of interest in the asset class. A lot of people are starting to, and that's just driving up demand, right? So in my book, it's kind of like, okay, what's next, right? So the idea was if countries start buying this as a reserve, all of a sudden you have new players. Now, I'm a little bit worried because the biggest buyer right now is Michael Saylor. He just keeps on buying and throw money at the money. But what happens when that money dries out, right? Which could create the sort of downturn that you were talking about, potentially going down to the 60s, if all of a sudden there's no more buyers left, right? Because somebody else has to come in and buy this asset or potentially hold it to levels where people are willing to put in the money. So that's what I'm paying attention to. I still don't have full dates. And my question to you would be, do you have any particular points or catalysts that you're looking at right now? Like what is the next catalyst for Bitcoin, you think?
I think that sovereign wealth fund is definitely a catalyst. I think the Trump's administration buying Bitcoin has partially, if not completely, been priced in, right? That's kind of why we saw this pump into the inauguration with the expectation that he's going to announce something with Bitcoin very early into his 4-year term, right? That didn't happen, right? But we did have that rally going into that. And then when that didn't happen, what we've had is basically a decline, a consistent decline over the past 2-3 weeks. I think the next catalyst would be, and the way in which Trump administration will buy Bitcoin is through that sovereign wealth fund, right? Because if you start looking at the news and what's being reported, what's being announced, it's not just Bitcoin, it's also just crypto assets. So that wording is very important. And we already know that Trump's team have announced, hey, we might not even be looking at just Bitcoin. We might be even looking at US-based cryptocurrencies. So that includes things like XRP, Solana, and so on. That's where I'm thinking, okay, first you need to establish the method in which the government is able to buy these assets, right? And then you need to specify, okay, what's the allocation within that sovereign fund, right? Because it's easier to pass, okay, look, we're going to allocate this many millions of dollars, billions of dollars to buying assets to establish this sovereign wealth fund. which includes Bitcoin and other US-based cryptocurrencies, as opposed to saying, hey, we're going to allocate, millions of dollars to just buy Bitcoin outright. So I think that's an easier sell. I think at the end of the day, probably Congress will have to do something here to enable that. So there's some laws and a process that needs to go through that. But yeah,
So it's
definitely.
a little bit of a sort of smaller process, like a longer term process. So we're talking potentially a year, 2 years from now before we see any buying, or
I mean, if you look at Polymarket, right, and we look at the we'll create national Bitcoin reserve in the first 100 days, right? So look at this. It all the way
come
up
down
to
drastically.
40%, 50-50 into the inauguration. When he didn't announce anything, it basically came all the way down. Now it's at 12 cents, which is essentially 12% probability that in the next, maybe it hasn't even been a month with Trump in office. So we have like 70 days left, something like that. So that's a 12%. I agree with this. I don't think that's going to happen in the next 100 days. Possibly it'll be this year, but realistically, 2026, end of 2025 is really where we can start seeing realistically the federal government buying Bitcoin. Now, what else has been going on? We've seen states that have introduced legislation to establish a Bitcoin reserve. I think the numbers up to maybe 10, 11 states already. Let's take a look at that.
Yeah, now that's interesting too, because they're going to try to front run the Federal Reserve, the federal government buying. So that could happen quicker. I think that could actually get implemented faster.
Right. So these are the states that have either introduced some legislation or in the process or considering even. So you can see there a good portion of the states. I mean, it's growing. It's 20 states are at least considering establishing a Bitcoin reserve fund. Not only that, but there have been other countries that have also considered doing the same, right? Obviously, like I said before, there's a bunch of different processes that has to go through, and some a country announcing that they're considering.
Tape, for sure.
So while that's a catalyst, at the end of the day, Bitcoin, within the history of Bitcoin, we also see this 4-year cycles, right? You have the halving, then you have kind of a year where it's kind of going up, but not the mania phase. And then the last year of that cycle is the mania phase, right? Where it just goes crazy. During this time, alts go crazy as well. But in the history of Bitcoin, we have not seen a Bitcoin bull cycle within an environment where interest rates are as high as they are today, and they're still quantitative tight, right? So the Fed is basically sucking money from the markets, right? And there's not as much liquidity as in previous years. So what happens there has been more of an accumulation of Bitcoin, because within the crypto universe, that is seen as the least risky crypto asset, as opposed to other alts, Ethereum, Solana, and so on. Obviously, you're going to have some altcoins that are going to outperform, but when you look at the market in aggregate, altcoins have underperformed Bitcoin by far.
Yeah, it's interesting. I heard a couple of influencers talk about about how people make money on crypto. It's like you buy a little bit of Bitcoin, then you grab that little bit of Bitcoin, like a portion of that little bit of Bitcoin, and then you go into altcoins. You try to make some money. You make some, you lose some. You make some, you lose some. You end up losing it all, and then the little bit of Bitcoin that you bought 10 years later is 10 times what it was, including all the losses anyway. So it's like just make it easy, buy Bitcoin. You know what I mean? Sort of play. But the other thing I wanted to talk to you about, and the other potential side of this, okay. So for Bitcoin alone, in this case, it's like, okay, like what are you doing right now? What are the trades that you're looking at in the near future? Now going forward, what's the plan for you in the next coming month?
So let's talk, before we go to that, let's talk a bit more about how I kind of manage my portfolio and the structure.
right? So for me, I have a good chunk of Bitcoin that I'm basically never going to sell, right? That's gonna just sitting there. I mean, maybe if Bitcoin goes through $500,000 this cycle, I'll probably sell it. So never say never. But there's a good portion of there that I'm not going to sell. That's just letting it ride, kind of savings in Bitcoin, right? With the assumption Bitcoin is always going to go up. It's obviously going to have its run-ups. It's going to have its crashes. But at the end of the day, over a 20, 30-year period, it's always going to keep going on. So it's the same thing as just having money into S&P 500's ETF and just leaving it there, right? Now, there's another portion of Bitcoin that I do trade, and it's more of a kind of swing trades, right? So I play the 60-day cycles, right? So like I mentioned, I sold some here, 108. Then I sold some here as well when we hit 109 as well, right? And then I bought some. I bought some back. So while we were in kind of the Bitcoin only upturn, which you could argue we're still in that period, I was basically just using that short-term Bitcoin to trade those cycles. It's a smaller percentage of my overall trading portfolio because I don't want to be in the business of being left behind, because I'm trying to exactly time the bottom and time the tops of those 60-day cycles, because what could happen is, you think it's going to go lower and it doesn't, right? Like I mentioned earlier, I thought this was going to go to 85. So if I sold everything here at 108 and I waited for it to hit 85, then I got left behind and I wasn't able to take advantage of this because I didn't have that big, right? So, and then obviously there's another bucket, which is kind of the riskier bucket, much smaller. Maybe it's about 10, 15%, where it's altcoins, including Ethereum, right? But that's kind of okay. I'm what every crash that we see in alts, that's my bucket of money to go in and buy alts. So that's I had that reserve of cash for most of 2024. I bought, there was a few dips in alts, so I was buying throughout the year. And that, for the most part, has been deployed. And I still have some reserves there because I do expect at least one more downturn in both Bitcoin and alts to take advantage of that. But that's just kind of like a little bit of background on how that portfolio is being managed.
Can I ask a little bit of detail? And it's okay if you don't want to give it to me, but what's sort of the breakdown? So you said long-term Bitcoin position, it's what percentage of your portfolio? Like, let's just say in your whole crypto allocation.
No, that's about 20 to 30%.
Okay.
Long-term.
Okay. So 20 to 30%. And then your savings. So I'm assuming the remainder is somewhere in the savings. So 45 to 55% is in the trading.
Yeah, exactly.
Okay, 45. Okay, perfect. Okay, just to have an idea. Cool. Okay, so you move your portfolio, because I'm more, so whenever you look at my stock portfolio and like the way that I trade and do everything, it's like I have 90% of my assets in long-term stocks. Long-term stocks, ETFs, breakdown of such, like very high conviction companies that the chances of them going bankrupt is like zero.
Right.
And then
your Nvidia,
I have like
Tesla's, Apple's, yeah.
Correct. And then 10 to 15% of my portfolio is actively traded. You know what I mean? So it's like, for me, it's like, and then obviously like, even because most of my crypto is held in Bitcoin in the long-term portfolio with like ETFs now and all that stuff too. So it's like,
well, now to clarify, right, that 46%, it's got allocated for me to be able to trade, but most of my trades are not that size.
Okay,
right?
okay, of course.
So within that sub portfolio or that allocation within that portfolio, I'm not trading the whole like 50% over here and then buying it back.
Okay,
I might do like
it's just
10%, 15, 20% of that 50%.
And if it keeps dipping, potentially another 5, another 10, and increase that position based on the current market sentiment, market moves, and all of the data combined. Okay, I get you. Perfect. That's cool. That's very cool.
One of the biggest lessons I've learned trading, especially in crypto, is you always want to be able to have a position to take advantage of a move up and a move down. And you're never going to get the top right. You're never going to get the bottom right.
So you need to be able to have that flexibility that if it goes up by a lot and it feels like it's overheated, you can sell a good chunk of it and still have some left to ride it up if it does indeed keep going up. But also on the flip side, if it goes down, right, and it dips, buy the dip. But then what happens if it keeps dipping and buy the dip again? And what happens if it keeps dipping? So yeah, you need to have enough reserve to be able to keep buying the dip and then buy them with more and more conviction if it does in fact go lower.
Yeah.
Now,
Okay. Yeah. Because that's one thing I wanted to say. It's like a lot of people in crypto, they sort of that to the moon mentality, but I'm not going to take a pit stop. I'm just going to get there without ever stopping ever. So it's like sometimes it's okay to take profits and just wait for the market cycles to come in, take advantage, build up your cash reserves, and then re-enter. You can always re-enter higher,
Yeah.
but re-entering lower is also good. It's also nice,
Yeah. And the thing with that
Key
is
point.
you gotta find things that you can do. You gotta maximize your profits by leveraging as many financial assets as you can. Right. So even with that, let's say you have, I don't know, $50,000, and that's kind of like, okay, that's a bit of reserves there, but that money is not really generating anything. Like if it's a savings account, you're generating some interest, but you're getting what, 4 or 5%.
Barely.
Robinhood, I think, pays you like 5 point something percent, 5.5. Right. But you could actually take that money and buy like a stock, something that's less volatile and uncorrelated to crypto. Right. And you can do things like selling cover calls, right, to hedge that and squeeze a little bit more profit from those holdings while they still can be used as reserves.
So I get you. So you're trying to sort of generate cash flow in your portfolio through different products, different strategies.
Exactly.
Okay. We definitely have to do an episode on those. Like a quick episode on like just, okay, if you have this amount of Bitcoin or in this Bitcoin ETF and you sell, you want to sell at 110 and your target is 110, well, sell options, like call options a little bit higher. If it hits, great. If it doesn't, you keep the premium, so it's also great.